Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. Our next investor conference is coming up, the Planet MicroCap Showcase Vancouver, on September 6th and 7th, 2023 at the Fairmont Waterfront, Vancouver. We have announced initial presenting companies, sponsors, and speakers. Some of those speakers include Dave Barr from Pender Fund, Harold Leishman and Brent Todd from Canaccord, Ryan Irvin from Keystone Financial, Hamed Shabazi from Well Health Technologies, and of course, Paul Andriola from Small Cap Discoveries, our lead sponsor for the event. So to register, please go to our website and learn more. Our website is planetmicrocapshowcase.com. See you in Vancouver. My guest on the show today is Simon Handrahan, editor of the Margin of Safety newsletter. He recently shared a tweet, or I guess a post now, or an X, I'm not really sure, where he asked his audience, and I quote here, "Individual investors, why don't you invest in illiquid microcaps?" End quote. When you deal with microcaps, there's a good chance you'll come across a company you might like that meets all your criteria and it barely trades. This is not news to most of you, but I thought the question that Simon posted on Twitter/X got me thinking. How illiquid is too illiquid? Is the lack of liquidity the edge when investing in microcap stocks? So I invited on Simon to chat further about all of this, plus his theses on stocks that are currently in his portfolio. Constellation Software, CSU on the TSX, OTC Markets, ticker OTCM, Atlas Engineered, ticker symbol AEP on the TSX Venture, and Galaxy Gaming, ticker symbol GLXZ. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Simon Handrahan. Simon, thank you for joining me today. How you doing?
Hey, Robert. Yeah, thanks for having me. Really looking forward to this conversation today, and it's kind of nice to be on the other side of it. I've been a fan of the podcast for years now.
Awesome, dude. When we were trading some messages back and forth about it, I was like, oh, that's so cool. I mean, I sometimes forget that we've been doing this now since 2015, It's 8 years of pods, 8 years of content. Oh man, just, at least another couple 2 chins, since then too, just trying to, maintain my voice for radio. But anyways, enough terrible jokes that you've all heard over the years. But, the main reason I wanted to invite you on is one, of course, like I just love featuring and having on as many microcap investors as possible on here, because there's always some kind of differential insights that we can yield and learn from, different strategies and whatnot, but I love this tweet that you put out the other day. I forgot exactly what day it was, but you said it was more like a call to individual investors about, why don't you invest in illiquid microcaps? And, we listen, anybody listening to this is like, yeah, sure. We can all come up with the reasons why, an individual investor or anybody wouldn't want to invest in an illiquid microcap. But I thought that was a kind of an interesting question to dissect a little further, because maybe there's some myths that can be debunked there, and also opportunity that's being left on the table because you see, all right, this thing is completely illiquid. I just want to avoid it altogether, and not even giving a chance to look at the underlying business because, hey, there might be something interesting there. So let's start off there. Why do you look at illiquid microcaps?
Yeah, thanks, Robert. I thought those, the replies in the tweet were really interesting. there's a lot of insight into why there's opportunities in microcaps in the replies. So I think, a lot of people's distaste for microcaps or kind of myths about the quality or whatnot are really why there's opportunity. That's what kind of creates the opportunity in my mind anyway. So why I invest in them, I think, it's a subset of my portfolio. It's probably about 20%. So definitely not exclusive to the microcap universe as an investor. One thing I kind of think about is what sets me apart from the average kind of fund manager or professional running large amounts of money, let's say, or, people that might have different motivations or imperatives. And, I think that's the biggest reason why I look to microcaps for opportunity is that I try to be a business owner first, not like a trader. So the liquid stuff, I think is where a lot of people will, for their own valid reasons, stay away from. But again, that's really where, as a person investing, their own money, I don't manage other people's money. That's where the opportunity might lie because of those reasons, right? And you follow people on Twitter or other places or professionals. You watch your CNBCs, and they seem to overvalue, I think, like the benefits of large companies. So I'm certainly not saying that large companies don't have advantages. They definitely do, but those are well-known advantages. And to think that there aren't advantages in simpler, smaller businesses is kind of silly as well. Like for anyone that's worked with a large corporation, you kind of understand the very nature of how slow-moving they can be or bureaucratic. People have all kinds of different incentives, let's say. There might be some empire building and things like that. So you think about a smaller company, and what I really find interesting is that the same people that say like all these microcaps are, let's say they have this thing about like they're all kind of garbage businesses and things like that. There might be some general truth to that in certain industries or certain sectors. Like I tend to avoid the cyclical names or more speculative names, but pre-revenue, pre-profit type businesses. But then I bet you ask these same people, let's say they live in a city or a small town, they probably know at least a handful of like very tiny local businesses that are really like gems of businesses, and they could probably tell you why they're really amazing businesses with like great cash flow, great little advantages. There's a lot of local advantages as an example for small businesses that big businesses just can't really partake in, or if they do, it doesn't really move the needle. So that's kind of where I'm looking is like, what are these small businesses that might, because of their size, offer a lot of little advantages that their bigger, supposedly better brethren can't really take advantage of.
Right. And I agree with every point that you said there. There are lots of advantages to looking where other, and it comes down to thresholds. And, and I think this is actually something that we don't talk about enough. I don't even think we've talked about it enough on here, is liquidity thresholds. Right. And just, what exactly do we mean even when we say like something is illiquid? Right. I mean, we'll look at it and we'll, take a quick look at the key statistics, like, oh, okay, this thing doesn't trade. Like, oh my goodness, like this is completely illiquid, but there might be some people listening to this and be like, all right, well, I might think that something that trades, 2 million shares a day is illiquid, and versus where me and you would be like, wow, that thing trades like a lot, man. Like, 2 million, like, wow. Like,
it's a relative thing, I guess. Yeah.
Yeah, exactly. So, I mean, for you, like, so, because also you hear some buy side, it's like, okay, anything under 50 million market cap, we just don't even look at, right? But there are also then individual investors that might look on the liquidity side, like, all right, this thing doesn't trade. Let's say, like, I'll give you like a benchmark for what we use for our index. Like, it's a 3-month average of at least $25,000 in average trading volume or more, which definitely is right. That's pretty liquid, when you're, especially as you get closer, but that's only because like we also want to include some of those illiquid names in our index because we think that we want to give some of that exposure because this is all of this makes up microcaps. But for the individual investor, sometimes like that just to give a little bit of perspective is, That's low for sure.
Yeah.
So like for you, what is your liquidity threshold that, either?
Yeah.
Yeah.
Like I'm not, I guess I try not to overvalue something liquid. Like that's not a reason to buy it or not buy it, I guess.
Right.
I'm not against a name having some regular trading volume that's in, the $500,000 a day or something like that. But for me, because I'm managing like really like tiny amounts of money in the grand scheme of things, it's less than $1 million or whatever. So like it's not something that, if I have 20% of my portfolio in that just gives you an idea. And that's going to be split up into different names. Like the volume can be like, it doesn't trade on, every other day. And maybe the average volume, if you spread that out, is like, 30 or 50 grand a day. Like that's perfectly fine with me because I'm buying, a few $1,000 at a time kind of thing. So, that's how I see it. But again, I think there's a lot of potential in things that are liquid because it makes people not look, into those names. But I don't necessarily think that's like a reason in and of itself. I really do try to value the business as if I was going to go buy the whole thing kind of thing. Right. So,
right.
So I try to look at it.
And that's the advantage you have as the individual investor, right?
Yeah.
You don't have these mandates, or, managing, multi-millions of dollars assets under management where, even if you really love a name that is illiquid, you're kind of you're held away because you just, you'll end up owning. I mean, you couldn't even size it to position, right? Like it's just,
that's right.
You're ultimately going to end up, probably being the only, one on both sides of the trade for, for a little bit. But we've kind of, I think we've already kind of covered a little bit of like why, some of the advantages you have when wanting to invest in the liquid microcaps, but what would you say is some of the disadvantages? Why maybe an individual investor might be like, hey, I may love this business, but like, I just, I'll wait.
I think, it's the classic kind of two-edged sword. So like, the one thing I think about with microcaps a lot is like the management team has a very disproportionate impact on the future of the business, right? So compared to like, it's kind of funny. People know like large cap CEOs and they don't know microcaps, but like in terms of impact on the future returns for shareholders, like people like to play up like Jamie Dimon and stuff. But like that guy has very little effect on how JP Morgan's going to over the future. So like, I think it's funny, right? Like, yeah, those are good case studies, but like, they don't actually make as much. That's sure they make a difference, but they don't make as much of a difference compared to, you look at a small company that has like a couple people on the board and, the CEO owns like 20, 30 or more % of the company. His whole life is kind of invested in, let's say it's his baby. And so that's the double-edged sword. So that's actually probably a reason why some people, if they're not going to take the time to like look into management, they should really maybe think twice about microcaps. The other thing I think, just because like they can be out of favor for a long time, I think people need to like understand that the volatility is going to be way more. So that's something I think people undervalue is like, you can have a great thesis for an investment, but if you're not the type of person to be able to withstand that volatility, then you really have to know yourself, right? So you have to know yourself, you have to know the business. Whereas I think a larger cap, like, a big tech company or something, I think you can kind of follow the narrative a little bit easier. You don't need to like be an expert as much. Now there's downsides to that too, but I think a good reason for a lot of people to stay away from microcaps is just they're kind of they're not really willing to like look into the management team, or they're not like valuing that high enough. I think you need to value the management team a lot more in microcaps relative to their bigger companies.
100%. I mean, from your perspective, of course, I ask you, listen, the show, so I love asking about management and talking with management, because in microcaps, I agree. Like there's doing your due diligence and understanding the business, reading all the K's and Q's, all that stuff, but you really want to get to know management as much as you possibly can within reason, right? Like you don't want to be annoying. They got to run their business, but like it is
Yeah.
good to get on a call at least once or twice just to, better understand maybe a couple things after reviewing some of the cues. From your perspective, I mean, what are some of the things that you like to better understand from management when you're considering, that potential investment in microcaps?
Yeah, I don't actually really talk to management directly usually. I do appreciate if I can get some secondhand kind of information from different people about. I don't necessarily trust myself to be good enough to avoid, the charm, the good salesman. Because I think these
It's
people
hard.
often are.
That's
Well,
hard.
there's a
It's
reason
hard.
why these people are where they are. I think a lot of it is they're good salesmen, and I don't think that's a bad thing necessarily. But I don't necessarily want to succumb to their skills at being really good communicators or whatnot. So for that reason, I tend to not reach out to management directly. But I will say that I try to look at what they do versus what they said and compare those things. So, I think there's the classic snake oil salesman tales from different people about the tales of woe of their bad investments where they were kind of promised the moon and really the delivery never came through. So I like to look for management teams that really don't promise too much, like they're grounded in reality, they understand the business, they understand the markets that they're in and the opportunities. And so I look for that a little bit more, like managements that actually do what they say and don't overpromise, so that there's opportunity to over deliver. So like if you think about what causes the stock price to go up, it's usually like over delivering on expectations, right? So if you can continually over deliver, then I think you've got a good case for why the stock might continually kind of go up and up. So long as obviously the underlying business has to perform as well, but those two things can kind of be a dynamite combo, I think.
100%. No, I was reminded of your, your editor of the Margin of Safety newsletter on Substack. And, before getting into our interview today, I reread the Quality Investors Manifesto, and you have a whole section on there about, some things that, your criteria for management. So I don't want to say the manifesto, right? We got to be careful, right? There's lots of manifestos out. This is Simon's manifesto. It's a good
one of many.
It's a good one. Don't get me wrong, but we got to be careful with that. But I like what you had for management criteria here, where you talk about shareholder alignment, cost focus, rewarding capital allocation, per share value creation. These were all easy to pinpoint metrics that, like, even if you don't necessarily want to talk, right with management, like, okay, these are metrics that you can see, like, okay, like they hit this, they hit this, they hit this.
Yeah.
There might be some links here.
Yeah, it's one thing, obviously the manifesto, it's a bit generic, obviously, but for each individual business, I think you ought to really think about, okay, for alignment, what does that mean? Like, does that mean that they own a large chunk, or is a few percent okay? Like, it really depends. So I don't think there's any like quantitative, thing to necessarily put there, but it's dependent on each individual business that you're following. So like the cost focus, the rewarding capital, these things are like, you have to really understand, I think, the business, and then you can overlay watching what management is doing. So like a prerequisite is you understand the business, the model, like how they run their operations. And then on top of that, you can say, okay, does management seem to understand that in terms of, how do I create value? And so then you can create your own specific like things to track and monitor for each one. I think that's what takes the time. It's like everyone kind of can probably spit out like, oh yeah, shareholder alignment. Great. It's probably easy to write that. The hard part is always like the specific, okay, for this business, what does that mean? And I think that's where, separates like an average investor from a good investor. And I'm not necessarily including myself in the good camp yet, but that's the journey.
100%. Yeah, no, it's interesting because, like, especially right now when, we're recording this on a Monday, August 7th, 2023, we're kind of in the middle of earnings right now. And there's been some interesting, say the least, there's been some interesting reports going out there in this last little bit, and kind of almost in a way, I don't know if I don't want to go so far to say like it explains why there's been just a microcap doldrum, so to speak, for the last, 18 months, or maybe I keep saying 18. I've said 18 months for the last 30 months. So I guess now I got to say it's like 20, 21, 22 months or something like that.
Yeah.
But the ones that are performing are doing well, and the majority that aren't performing are not doing well, and so it's been, I don't know, there's a few amongst our microcap cult circles, there was a few earnings releases last week. I'm hoping to have those companies on at some point for due diligence to really dig into like what's been going on, and I mean, these are all things as to why when you're looking at microcaps, you need to be paying attention to those Qs and Ks, because that's where you'll get all the meat, like, yeah, the customer wins here and there. Yeah, you want to see the business growing. Yeah, okay, like what does this mean now for, revenues going forward or those long-term contracts? But at the end of the day, like that's where you're going to see all the good stuff that you'll need to.
Yeah, definitely. Yeah. I can't say that I'm like super up to speed on like, following earnings on my watch list as much as some. I definitely don't have the time to necessarily do that. So my approach tends to be like making sure I understand the businesses I own, and really searching for the next one or two that I can contribute to over the next, let's say, year. And I'm definitely, because of that, I'm going to miss some good opportunities for sure. So that's part of it. I do find it interesting. Like I said, I think over the last, let's say, since interest rates started going up, basically, so whatever that was, with all this inflation and everything, like I think it's a really good testament to how the quality of the business in terms of like how they're financed and things like that. So the pricing power they might have in this type of environment, that's kind of the model I tend to look for. So even if their end users are hit, they can still kind of be resilient and that. So it's like I really don't try to predict macro stuff. But I think, as you alluded, like it's a really good market for like a business picker. So it's not been this whole like all stocks are going up necessarily over the last couple of years, but the ones that are performing and are resilient have really done well. So it's interesting. You hear the whole like stock pickers market or whatnot, but I think it's a really good testament to when there's uncertain times, which is basically all the time. It's really like it's really a business pickers market that way. So a lot of people, I think, enjoyed the big wave of low interest rates forever and going down, and that does great things for the broader market. And now when that's changed, like the good ones kind of separate, so you get the separation. Yeah.
I will say I do miss the days of watching Portnoy like pull out tiles.
Entertaining for sure.
Very entertaining. Yeah. Not definitely don't take that as investment advice ever, even when markets ultimately turn around. But one name I wanted to ask you about, maybe as an example of why you look at some illiquid names. I mean, this isn't a microcap anymore. It's 600. I mean, as of today, 680 million market cap, but they very much serve the microcap market quite extensively and providing cross listings, helping companies trade in the US, and that's OTC markets, OTCM. Just confirm you are a shareholder still.
I am a shareholder still. Yes.
Sure. Yeah. So I'd love to hear your updated thesis on that one. I mean, obviously it's a name I know forever. We've interviewed countless OTC listed companies over the years. I've interviewed Cromwell on here a couple times now. So I'd love to hear your thesis there.
Yeah, for sure. I don't think this thesis has changed a whole lot since I first wrote it up, but I've held it for probably over a year anyway now. And it's unfortunate I didn't find it earlier, I suppose, but I didn't really start looking at smaller names until the last couple of years. Any case, like the business model is it's quite unique in that it offers essentially like a monopoly type of service for these small businesses. They really do offer a service to those customers that they can't really get elsewhere, and they've got that regulatory kind of capture. Like I think there was a lot of worry that bigger exchanges and different things would come along and kind of steal a lot of their business, but that's proven not to be the case for various reasons. But a lot of it is it's such a niche thing, and and there's not really a lot of reason for these customers to go and switch, even if they could. It's a relatively small cost too, so like for their customers. So I don't think it's something that people are going to be saying, "Oh, geez, I really like to get your service, but it's just too much money." Like that's not really. So they definitely got some pricing power there. Recently they've done a couple acquisitions. So there's some kind of one-time, I would say, mostly one-time costs associated with that, which has dragged down thing, and the timing of it with like volumes kind of coming down as well, which is expected. Like from time to time, like it's a cyclical thing to some extent, like the trading volumes. But yeah, the thesis hasn't really changed. Like they don't really need a ton of capital, so like they've got a solid balance sheet, and I think Cromwell being at the helm there still, I think for at least a while, will be really, really well. Like he's essentially, the way I think about him is like he's kind of like a founder version 2. He's really transformed that business, and he's been an advocate for the industry. And they've been done an amazing job at really like pushing the regulations in the right directions. Not only for them, but for their customers, I think. So I mostly see them as like a win-win-win. So like their stakeholders, their customers, and the shareholders really all kind of win. I don't really see it as something that they're not really ripping anyone off that way too much. Yeah.
And the moat around, because as they like to say, it's not an exchange, it's an alternative trading platform, but there isn't much in the way of competition, and anybody that's trying to launch a new kind of exchange or trading platform, like it's not breaking through,
That's right.
For whatever reason. I mean, not for whatever reason. I think we all know why. Like trying to get companies on your platform and trade there and not on that platform, where there might not be as many investors that even are looking there to invest in companies of this size. Like it just
there's not a lot of reason to do those switches, right? So and if you're a large competitor, let's say, it's a pretty small market to go after. So it's not really something that's going to move the needle for most of the big guys to go after that. And I suspect there'd be regulatory challenges anyway with that type of competition. So it's just interesting, I think.
It's one that, and for full disclosure, I'm not a shareholder in OTC markets, but one thing I've always really liked that they like to celebrate, companies that do graduate. Because I also think deep down they know which ones might be back at some point, right? I mean, listen, there's ones that graduate and they stay, of course, but there's quite a few,
some fallen angels,
yeah, you see, they get their notification from NASDAQ that they're not within compliance, or from the NYSE, and as an investor, you're like, all right. Okay, I'm going to be on the QX soon, that's fine. They'll be on the QB, that's fine.
I think like the QX, I think that's the premier, kind of the top one. That's becoming probably more and more of like, hey, this isn't just some shady operation. As time goes on, I think that's becoming more and more of a, hey, this is just a good quality place to be. And it's unfortunate that, like, I think over the last, maybe, I don't know, 30 years or something, there's been less and less publicly listed smaller companies, just maybe partly due to the interest rates, et cetera. But for whatever reason, it's gone down. So that's an unfortunate, maybe slight headwind. But I also think that kind of keeps competition at bay as well. So it's can be beneficial too.
By the way, and then talk about illiquidity for 608 million market cap company. Like the average is what somewhere between $50,000 to $75,000 a day, something like that.
It's not something a large fund can really own, I don't think, as far as I'm aware. It's amazing how little it trades for something that's getting up there in size.
I'm curious as to why. That's always something that everyone knows it. It's not. It's a well-known commodity at this point. Everyone knows, like, this is where the majority of not small, but like at least microcaps are trading.
It's a well-known one for sure.
It's recurring. They got a recurring model. You all know that all these companies are going to be paying somewhere between 12.5 and 15 to 20, 25 a year. I don't know. It's an interesting question. I mean, I should have Cromwell back on soon. Like we haven't done anything in a while, so it'd be good to get his take on state of the markets and what he's been seeing and all that kind of stuff. That would be good. But I just had I had on Paul just recently I mean, he had his experience at CSU as well. I mean, love to hear your thoughts there. I mean, obviously, again, not a microcap, but amongst our ilk, it is a microcap gold stock to say the least.
Yeah.
That's your largest holding, by far. If I think I saw in your most recent portfolio update, it's like 40% of your portfolio. So, what are you seeing there? And is it going to be above almost 50% at some point? I mean, you clearly like it.
I hope so. I haven't been adding lately. I think that the price is perhaps even gotten away from itself a little bit, but they've been executing super well. So yeah, full disclosure, I own Constellation, as Robert just mentioned. It's my largest holding by a fair margin. I bought it at originally closer to $1,600 or something a few years ago when everything kind of got hit during COVID. And the more I dug into it at the time, the more I thought, hey, this is something I should be owning more of, not less of. And then it's really performed well, and I've been lucky enough to be able to add to it as it's gone along. So it's really like a double compounded effect in terms of why it's such a big thing. People always ask, like, hey, how is this such a big part of your portfolio? And the answer is, well, various reasons, but it was a big purchase initially. And then also I've been adding to it, and it's just performed so well, better than most of my portfolio. So I guess I got that part right. It's something that I think I would love to hold for, one of those kind of ideally forever type names, as long as it's performing and it's got a good runway. So, Paul's a great follow. I've been following and talking to Paul every once in a while on Twitter. He's I got some inside experience there. He doesn't talk about this experience too much, as you know, but
yep.
He's exactly the type of brain that, the way Paul thinks about investing is, I think, how CSI kind of sees Constellation, how they see investing. So despite him departing from the company, like it gives you an idea of like how they're deploying their capital. It's people like Paul that are willing to kind of. What's interesting is that like my investing approach doesn't necessarily line up with how the managers and capital deployers at Constellation would deploy their capital there. So I recognize that I don't really necessarily have I don't know if it's the patience or what it is to go after those kind of deeper value type, businesses, smaller, deeper value businesses. Most of my portfolio is in like larger, higher quality names. So generally I have to pay up a little bit to some extent. But what's interesting is that I can kind of arbitrage that by owning Constellation. And what I like about it is I'm pretty confident that they have the unique, like the set of opportunities and the not only the ability, but like the kind of their culture to be able to have the patience and have those high hurdle rates that, frankly, I don't have both the ability probably and the patience for that. So I can kind of arbitrage my own poor skill and just own that.
Fair enough. All right. So one other I have to also, I mean, look, we're on a microcap podcast and, I haven't even asked about a microcap name that's in your portfolio, but I mean, I think a lot of folks that are listening on here, they know they're aware of Atlas, right? Atlas Engineered, AEP on the venture. For full disclosure, you are a shareholder.
Still? I am a shareholder. Yes.
Yep. Yeah. So love to hear a little bit more about your thesis there too. Why?
Yeah. Yeah, for sure. I'm happy to talk about Atlas a little bit. So yeah, it's one that I think I love how simple it is in a lot of ways. You've got like a lot of so Atlas is a roll up of truss companies. So they manufacture wooden trusses mostly for residential housing, primarily in Canada right now, but they have future plans to try to expand into the US as well. And I think a lot of people are aware of the housing kind of shortage for residential. It's been, well documented, I think. And with lots of immigration and things, especially in Canada, there's, I think, really a kind of a decent runway. So their model is essentially they're going to go around rolling up a very fragmented industry. And most of these businesses are kind of what most people would think of as like mom and pop operations. So they're able to buy them at reasonable valuations, like 2.5 times EBITDA. And the interesting thing is that like most of these businesses aren't necessarily professionally run in terms of their operations. So one of the benefits that Atlas can bring is they can basically improve their operations by being a little bit more rational, having the right kind of lens on how to operate. So that's one of the cost focuses that's in the manifesto that we talked about. I think that's a good example of someone that is able to focus on costs. So they buy something, you know, a reasonable valuation, and they improve it, so they get a lot more return that way. And there's plenty to roll up, so it's a big fragmented industry that way. And then the other interesting thing is that these businesses currently kind of, I guess I should say, like the housing industry, like is suffering from kind of a shortage on skilled labor on site. And one of the things that Atlas is trying to promote and sell a little bit more is like things other than wood trusses pre-assembled, so floors and walls essentially, and things like that. So super simple idea with some organic growth opportunities and really focus on cost reductions with, you know, how they integrate the businesses that they buy. I think the risks there are like, it's a cyclical industry to some extent as well. So, you know, there's always kind of, am I buying at the wrong time in the cycle? So that's maybe the kind of the risk and the difficulty in these ones. And there's no suggesting, you know, they could do some stupid things as well. So, but the idea is, I think it's a great example of something that's just kind of simple. It was so small and kind of hated by the market for a little while because they did go through some trouble a few years ago, and the founder kind of came back and took it over again. And he's one that, like, he understands the industry really well. He's been in it for like 30 years. So just an example of something that's been hated, small, overlooked. Now it's got some momentum to it. So things are looking up.
Yeah, you got another one that you just recently bought that I think has that same mentality with Galaxy Gaming, where it was hated, and then, you know, they've been pushing through, you know, all those struggles from years back with new management and stuff like that. So you just recently bought that one, I think, according to.
I recently bought it, yeah.
Oh, okay.
Yeah, I think I was able to get it around 250 recently. Very illiquid, small business there. I don't know, you've talked to their management at some point. Yep. Maybe.
Yep.
Solid management team there. Kind of maybe a couple of years ago, you would say like a turnaround opportunity, I would say, just like you kind of alluded to there, some prior issues with the original founder. So because of that turnaround, they had some high amount of debt. But if you look at like their cash flows, it's a very highly recurring revenue, high margin business. Really very high quality business. Margins are improving. They've got lots of top line growth coming. So that debt is likely to be restructured. And I think at some point the market is starting to kind of pick up on that. Like normally I wouldn't play into like turnarounds too much, but the way I think about this one is like the turnaround kind of occurred a couple of years ago. Actually, it just wasn't fully recognized until maybe recently. So I think that's another advantage of microcaps, is that like you can have a little bit of patience, and the market doesn't always recognize these things as quickly as they would be. You know, if it was a large cap, this type of recurring business model that has super high margins and some growth, I can't imagine what multiple it would trade at, like 3 or 4 times what it is today. So yeah.
Very good. All right. Well, you know, we're at that point where, you know, look, at some point, I'm sure we'll probably do an even deeper dive on some of these names, but I always like to just kind of ask about them as it relates to, you know, how you think about, you know, your approach to investing in general, you know, obviously in microcap specifically with the last 2 names, but, you know, that's why I asked about them, because they're clearly 3 out of those 4 are arguably quite illiquid. Right. And,
yeah,
you know, maybe AEP, Atlas, not as much maybe, but like, you know, still on the grander scheme, relatively.
Yeah.
So I appreciate you sharing your theses around that, and why in these cases the illiquidity of them doesn't bother you, because your focus is on the underlying business. So we're at that point where this is my favorite question I like to ask folks on here, that especially if they're first time on the podcast. What would you say is an investing experience that changed your career the most when looking, let's say, specifically at microcaps?
Sure. Yeah, I think with microcaps, this one was actually one that so far hasn't worked out, but I'm still kind of looking forward to the future of it. So I bought Leah Technology. So this is a very small company, and I bought them really at the wrong time in the cycle. So they had a lot of inventory issues essentially. So the stock price had done really well. They're founder led, like very niche kind of business. And that's still one that I hold because I think the future is, promising for them. But looking back, it's so interesting to see how kind of obvious in hindsight that one was something that appeared cheap. But if you dug into it further in terms of like, okay, where are they in their own business cycle? It was quite clear that like it wasn't that cheap at all. So essentially like a low PE with some growth. But then you look at there was a lot of pull forward essentially due to the pandemic with outdoor sports. So that one was kind of obvious in hindsight. And I think a lot of people actually pointed that out to me at the time, and I disregarded that. So going forward, I think I'm a lot more sensitive to like, okay, here's where we are now, but what about the cycle of their business? Like, is it something that just goes up and up forever, or is it something that has a cycle to it? And trying to factor that in is often difficult. So I try not to, invest in names that are too exposed to those types of cycles, but that's one that I think sticks with me in terms of a lesson. So something that I'll probably remember forever.
Very cool. All right. Well, to close this out here today, what, other than, pointing folks to go and read your manifesto for quality investing, what are some, either final thoughts or final takes regarding microcap investing that you want folks to really take away from this interview?
Yeah, I think, microcaps are just such a rich treasure trove of different business models, something that you can really, as an individual, leverage to your advantage. Even if you're not interested in like devoting, all your time and your whole portfolio to it, I don't see why you wouldn't at least take the lessons from them and like, even if you're going to treat it like a case study. And, there's no rule saying you have to just put all your money in microcaps either, right? So the way I kind of look at it is I'm probably never going to be 100% microcap, but it's as an individual investor, which I suspect a lot of your listeners are individuals, go take a look, right? Like it's probably a really good way to learn. The other thing is like you can't always just steal the consensus narrative from Twitter or CNBC or things like that for microcaps, like you can, the Facebooks of the world, and the Amazons and things like that. So you have to really be comfortable in your own skin, like coming up with your own story or forming it on a few little people's ideas. There's nothing wrong with stealing other people's ideas. It's just that you have to kind of be able to come up with your own in order to hold them. So microcaps is such a great opportunity to do that.
With that, Simon, where can folks go and subscribe to your newsletter as well as follow you on social media?
Yeah, for sure. I'm probably more active than I should be on Twitter. You can check me out at Moss_investing there. And my Substack content is available. There's free and paid content there. It's marginofsafetyinvesting.com.
Yeah, it's funny when I first started following, I thought, wait, is he at MOI? Because I was like MOS, so I like in my head I like had that quick thing, but all good. Yeah, great follow, Simon. Thanks again for joining me today. Really do appreciate it. Good luck, stay safe, and I look forward to our next update.
Thanks, Robert.
Thank you. Podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.